Silver Price Watch. Stay till the end and take notes, as this might help you make sense of the situation. I'm giving you 3 scenario ranges for this week and breaking down key indicators, and we will discuss the most likely scenario at the end. Please remember, this is informational only. This is not financial advice. As we head into Monday, February 9th, silver is around $80. Scenario 1. Bull case. If the delayed jobs report comes in soft, CPI cools, and the USD stays under pressure, silver can keep bouncing hard off last week's washout. My bull range for this week is $86 to $96. Here's what confirms it. 1. Price reclaims $82 to $84 and holds. 2. USD stays soft after jobs and CPI. 3. Gold stays bid and risk-off hedging doesn't fade. Scenario 2. Base case. Base case is ugly chop. Big intraday swings, but no clean trend, because this week is a macro doubleheader and the market is still deleveraging. My base range for this week is $72 to $86. Key indicators to watch. 1. Dips get bought above $72 to $75. 2. Rallies fail under $86. 3. Data comes in mixed and we stay headline-driven. Scenario 3. Bear case. If jobs or CPI prints hot, yields and the USD jump, and margin pressure forces more position cuts, silver can flush again fast. My bear range for this week is $62 to $74. Key indicators to watch. 1. Price loses $72 and can't reclaim it. 2. USD firms hard after data. 3. You see fresh liquidation headlines and forced selling language return. And here's what decides which path we're on. Driver 1 is margin mechanics. CME has been hiking margins again because volatility is still extreme, and higher margin requirements can force some traders to reduce positions. Deleveraging can trigger forced selling or forced buying. Result: higher volatility and sharper intraday swings. Translation: this week can move hard even without new headlines. Driver 2 is US data week, and the timing matters. The delayed US jobs report drops on Wednesday, February 11th at 8:30 Eastern Time, and CPI hits Friday, February 13th at 8:30 Eastern Time. Silver reacts hard because jobs and inflation move rates and the USD. Hot data, USD up, silver often down. Cooler data, USD down, silver can bounce. Driver 3 is crowding and flows. When a trade is packed with retail plus momentum, moves get exaggerated. Rallies overshoot, pullbacks get sharper. That's how you go from moon to margin call fast. Driver 4 is headline risk. Silver is trading like a macro asset right now, not a calm industrial metal. Quick reality check. After a violent move, the next week is usually stabilization or another flush, rarely a smooth trend. This week is basically a fight between $72 to $75 as support and $86 as recovery. Above $86, the bull bounce has room. Below $72, the bear flush risk jumps fast. Here's the weekly map again. Bull, $86 to $96. Base, $72 to $86. Bear, $62 to $74. 3 things to watch this week. 1. Margin and volatility headlines. 2. Wednesday jobs report reaction. 3. Friday CPI reaction, because that can decide the weekly close. Now, the most likely scenario for this week, based on the real-world setup, our call is the base case range, roughly $72 to $86, but with elevated bear risk around the data drops. Here's why. 1. Margin pressure usually creates messy two-way trading, not a clean trend. 2. Silver is still stabilizing after a violent washout, which usually means range building. 3. Upside can get capped quickly if the USD firms on hot jobs or CPI, so a smooth bull run needs a clear catalyst. Please remember to hit that subscribe and stay tuned for the coming week's updates. As always, this is not financial or investment advice.